This is the Healey Brothers Show.
We're here, episode 36 of the Healey Brothers Show. We got my cousin Brian, Jay, and Eric Foster from Woop Insurance. He's the founder and CEO of the company. One of our partners that when did we start up? A few years ago, during COVID about, right?
No,
was it that?
Recent, very recent.
Like ended
23.
23, oh my God. I'm mixing the stuff up here. Brain's not all together. So, I mean, just if you want to give us a quick introduction about Woop and then maybe about yourself and how you guys got started, and then we'll talk a little bit about our partnership and the industry and all that.
Yeah, absolutely. So thanks for having me, guys. Woop Insurance. So like you said, I'm the founder and CEO. We are an insurance platform, single place to track, manage, and save on your home and auto insurance. How I got into this, yeah, I've been in the insurance industry for most of my career. Like everybody else in the insurance industry, I started in the National Park Service. That's an insurance guy because like no one wants to get into insurance. I worked at a reinsurance company, one of the world's largest reinsurance companies, dissimilar from like the reinsurance in the auto world, mostly property casualty. And I did kind of everything. I actually started as a data entry temp, worked my butt off, ended up in their innovation group. I built them some companies. So I built them like standalone insurance products, some companies, got really fascinated with insurance distribution, which is just like insurance for regular people, and then left in 2019 to found Woop Insurance.
So if you just want to give us a little bit on Woop, what it does for the consumer, what it does with the dealer, the breakdown, how, like pretty much the operations, the dashboard and all that stuff.
Yeah, what makes you different than just a regular insurance agency?
Exactly.
Absolutely.
Perfectly put.
So most people know us for the similar things that every insurance agency does. We work with dozens of different insurance providers. You can compare, save. We do all of the work, shopping, work on behalf of the customer, so they don't have to do it all, as well as making it really straightforward for them. The things that we do different, so it all kind of hinges to our focus on transparency. And the reason why we're focused on that is if you look at the insurance industry, like the common denominator that everybody feels is that it's not really fair. Right, so like we've actually done informal polls to get like people's like initial responses on what they think about home and auto insurance. Number one response is it's a scam. And like,
is that really?
Yeah,
that's
not
true?
kidding. That's actually the number one response. And like I could unequivocally tell you like that is not the case. It is not a scam, but it still doesn't feel very fair. And the reasons why it doesn't feel very fair is because it's this product you have to buy. Like the government requires you to buy it if you're going to drive. You don't know where the prices come from. Even if you're a loyal, good customer and you never use it, randomly your price is just going to go up and you have no idea why. And even if you are a good customer and you actually use it, you get penalized for using the product you're paying for. Mm-hmm. So it doesn't feel like this fair thing. No one really understands that. So we're rooted in transparency to solve that. And how we solve that is, in insurance, there's this term that's called like asymmetry of information, which means like the insurance companies know a lot more about you than you do about them.
Oh, that's for sure.
Yeah, they really do. Like more so than you would imagine, right? So anytime you get a quote, they're pulling your MVR, they're pulling your credit. They actually share all of your information with each other. So if you have a claim or loss or violation with any of these insurance companies, they all know it because they share that data. So what we do is we tap into that information and initially send it back to you. So you have an idea of like, okay, this is actually how I stand as a customer. It's kind of like Credit Karma for insurance. So you can actually see like, here's my score, here's what's driving my cost higher or lower. But then underneath of all of that, we just build that into how we take on business, how we approach consumers. So that's saying, hey, maybe you know we can quote you right now, but maybe right now is not the best time because you're actually a better risk in 3 months where this claim is no longer rated against. This claim can't count anymore. So we basically take the game that the insurance companies play and then use it on behalf of the customer. And that all starts with our dashboard. That's the illustration of here's what we're doing behind the scenes. And then we're just doing it behind the scenes as an organization.
So it's hard to it might be a little difficult to describe to our viewers without physically seeing it, but
we'll show it on the screen too.
What exactly does the dashboard look like? Because there's nobody else that has this.
Not at all. It's pretty straightforward, right? So a couple key features to it. So one, we score your price. If we're looking at a similar customer like you in your state, how does your price compare? Is it average? Are you paying less? Are you paying more? Really simple analogy. Underneath that, we do our report. That's where it's called like Credit Karma or any sort of analogous like credit report provider. But for insurance, here's the things that are going to make your price go up. Are you red, green, yellow? What are the factors contributing to that? And then underneath of that, we actually provide what we call our rate monitor service. So what people don't normally know is that all insurance, my duck is quacking from my phone. Sorry, guys. Every insurance price is actually public information. So insurance companies have to file their rates with the government. It's really hard to reverse engineer that so you understand like why exactly that price is. But we track every single company in every single state. So if you've connected with your policy with us, even if you're not our customer, we're going to proactively tell you, hey, your rate is going to go up by X amount for your next renewal.
And also one big part of that too, you tell them if they have the proper coverage, because that happens a lot in New York where they don't get the proper coverage from some of these mom and pop local insurance companies, and it becomes a major issue for the customer and other people on the road.
Yeah, or someone who owned their vehicle outright, they dropped their full coverage. They now get into a vehicle that has a loan, and maybe the salesperson didn't say the right thing to the insurance company. Not every insurance agency requires that they speak to the customer. Some just deal with the salesperson. The salesperson doesn't provide the correct information, and now that person is driving around with only half the insurance that they need.
Exactly. So specifically for like what Woop does with Healey, so every person, every one of your customers can go in and access the dashboard. That's totally free. No questions asked. They can get into it. But what we work with you guys on is this process that we call insurance verification. So every single finance vehicle has specific insurance requirements. I would bet 99.9%.
And it's different for every state too. So we're in the tri-state area. So
it's different for state. It's different for finance company. Like they actually do have different requirements. Like they can set those rules. No one really knows what they are.
And those different requirements, meaning the coverage limits, deductibles.
It's liability, it's coverage limits, it's your deductibles, it's all of those. And then even simple things like, is your new VIN on the policy?
Yeah.
Like in some states, not in New York, but in some states, like the dealership isn't even required to check that. So they don't have to. It's not their job.
no, and it also happens by accident all the time. So
Yeah, mistakes do happen, right? So we do just our insurance verification process, which is just, hey, connect your insurance. We'll tell you if what you have matches what's required. And if not, we'll help you get it updated.
yeah, and just so people know, that's the email you get just for us to verify, make sure everything's matched up properly. Some people get a little worried, and we get a call every now and then like, oh, what's this email? Do I not have insurance? No, it's just to verify everything's correct with your insurance company that you use, whether you used ours or not, or went through Woop, and just to verify it's the right vehicle, all that good stuff, so you're protected.
Yeah.
So,
and to put that in perspective, like how pervasive the problem is, we see throughout every dealership finance company that we work with, about 20 to 30% of people don't update it correctly. So like there are a lot of errors that happen.
Our dealerships are a lot lower than that, though.
Oh, you guys are 0%. Right?
It happens. Mistakes happen. But
Mistakes happen. And it's not even necessarily the dealership's fault. Like the insurance agency, you could literally be on the phone with the insurance company, the insurance agency, and like, yes, I've updated this, it's done. Okay, what if it didn't get done correctly? Like that, mistakes happen. This is still a very manual business. And on top of that, if we see about 40% of people don't update their lien holder correctly. So I'm gonna can I go on like a deep dive?
yeah, go ahead.
Finance.
As long as you gotta keep it simple, because most of ours are just consumers looking into.
It's all good. It's all good. Your finance company checks your insurance. Like it's the same as if you buy a home, your mortgage company will check to make sure you have insurance. It's pretty straightforward. It's all kind of done behind the scenes.
Yep.
But if something's not updated correctly, your finance company can literally just buy an insurance policy for you and make you pay for it. It's part of every single lease or lender or finance agreement.
And those insurance companies and the finance companies, they're not always right either. You could get a letter in the mail saying that this vehicle is not listed with the correct coverage, even though it may be, or this vehicle has the wrong name. It happens, if you have a lease with a U.S. bank, they say, well, you don't have any insurance. Well, you can send it in and say, here, I do have insurance. 8 months later, you'll get the same letter in the mail. There's mistakes on all spectrums.
Yeah, it's not like the dealerships, it's not the customers, it's just a very weird system that doesn't work all that, and there's errors constantly. And
You would think it'd be better with all the technology out there.
I guess there's 350 million Americans, and if there's 2 cars to every household, I mean, there's just so many. I mean, it's just law of averages. It's going to happen.
And the bundling is probably
it's going to happen a million times a year.
So what I think the root cause of the problem, insurance company systems are really, really old. So a lot of this.
So are some car dealership companies too. So let's.
A lot of these systems are still built on fax. Like that is their number one thing they can do. It's just an overnight fax that is sent. So like, yeah, errors happen from that constantly.
Yeah, it's true. I mean, we get that all the time. You know, we want to email can you please email the insurance card and binder over? No, we have to fax it.
Yep.
What? Yeah. It's 2024, but I don't even know.
They were actually using dial-up, some of those guys too.
Yeah,
so
it's we feel it on our side too.
So is there anything else you want to really touch on that system ways and the way it works?
Yeah, so what the upside for doing the verification for us is you can basically make sure it all gets done correctly. It's really straightforward. It's super simple. It is by far the most superior process that exists compared to faxing and updating it. We actually work with some of those companies that do the verification.
And we could vouch for that because we tried another company that's multiple, and it wasn't as easy for the customer. It was like more like forcing them to do the steps kind of a thing.
It's a hard thing. It's a hard thing.
It's not easy.
Yeah, so it's a simple way, and like it seems weird and off-settling at times, but like it happens much more frequently that way worse things happen behind the scenes. And this is like, all right, I'll get it done easy. Don't have to worry about it. And that's where our whole process of like transparency, like, this is what happens behind the scenes. We'll make sure nothing bad happens. If you like what we do, we'd love to do business with you.
So if you guys are the agent of customer A, how often will that person be contacted by you as far as letting them know that there is an opportunity to reduce their insurance costs?
So if you are our customer, every single customer hears from us when we sell, about midterm of the policy, and then before the renewal.
So that's about 6 months and then a year later?
Yeah.
Unless the customer obviously reaches out and they want to try to bundle or shop something, or they know it's coming up in shop.
And we are very much trying to like package that and bundle it together whenever possible, as long as it makes the most sense. Sometimes it doesn't, like flat out. Sometimes it doesn't.
Yeah, I mean, because sometimes going policy to policy with different vehicles, different houses.
And there's other insurance companies that will not take your auto unless you bundle the home. Just it's not feasible for them, monetarily.
Yeah, so we reach out to every customer early on the policy prior to the renewal, and we'll flat out say like, hey, I need to give me consent. I'm going to shop your policy. Like we see that particularly now. Prices are crazy right now. We'll be like, hey, we're going to automatically just take a look at this. Because we know, like on the flip side of that, you're just going to leave. Like if your price is going up 50% and we didn't do anything, of course you're going to leave. So why wouldn't we be proactive and honest and just take a look at this? But then on the other side, if your price went up 5%, and I'm like, hey, your price went up 5%, the average price increase was 20%. Like, this is actually a pretty good deal. You want to stick with this. You can shop around, but like, it's not going to actually benefit you in the long run.
Shopping around is
So-
not easy.
Yeah, I mean,
I mean, the alternative is Googling insurance agencies and calling and having that person manually run the numbers, and they might be, assigned with 3 carriers, and then you have to call another agent, and then they might have 3 others, and we have an affiliate company that just went through the same thing. He's a transporter in the auto industry. His insurance went from about $6,000 to $50,000.
Oh yeah.
He made phone calls to 15 different agencies. They all ran it with everything that they had, and he said, "I'm SOL."
I mean,
Nothing
at
I can
Healey,
do.
we went through a similar thing too.
Yep.
So we had a major increase as well. So
It's
it's not easy too, and especially with all our moving parts, it's obviously different for different types, but mostly for auto and people using their houses, it's drastically gone up. I mean, you see it on the news all the time.
Mm-hmm.
So now that we're on that topic, real quick, do you have any like stats right now for this area, or exact stats, or countrywide, or something like that, so we could share? Like the increase.
I should have pulled New York's average increases.
Well, if you want to send that to us, we could put that on the screen too. So after this, if you just want to send it, we'll mix it in there.
I think top of mind last couple of years, we're looking about an average 23% increase in New York. That's roughly ballpark. There are some states that are way, 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 way worse.
Like what are they, like California's probably out of control.
California, California's a weird one because the rates don't go up, but you just can't get it. It's kind of a broken marketplace. So because of how they regulate insurance, the rates don't go up very quickly, but companies will just be like, all right, they're not letting me raise the prices enough, I'm just going to leave. So like you can't really get home insurance in California right now.
That's crazy.
Yeah.
I know Florida is like almost impossible too.
Florida's incredibly difficult. They did some things. It's getting a little bit better right now, but Louisiana's having the same problem. Texas is starting to have similar problems. So like it is a pervasive thing.
It's the states with natural disasters.
So New York, PA, and Jersey might be increasing, but at least you can get some insurance policies. To cover your
it does feel bad, but it could be a lot
products.
worse.
Yeah. So. All right, yeah, we'll put those. If you could share those with us, we'll put those on the screen just so the viewers and obviously when we clip it up.
Maybe just rattle off a couple of the top carriers that that you guys can provide insurance through.
Yeah, so the top ones that we're going to provide for are going to be like we're looking at Travelers. We're going to look at a Safeco, which is a affiliate of Liberty Mutual, just different brand name. Do a decent amount of Progressive, and then if you're having some trouble from your insurance, you don't have prior insurance coverage, we'll bring in some specialty carriers. That's when you're going to look at more like a Dairyland, or specifically for you guys, we do Bristol West Foremost, which is all farmers. So a lot of these
so
random niche names are also usually owned by much bigger companies.
Yeah, and customers don't know the small mom and pop ones. Like I shouldn't call them mom and pop, but the big names are the Farmers, the Progressive, the Liberty Mutual.
Yeah.
So those are those ones. All right, let's move on. So real quick before we move on.
Yeah.
Do you have any crazy stories of what we say, like what you saved a customer or anything like that? Like some big ones?
Yeah, so two different like stories we constantly hear that come to mind, right? If you haven't switched your insurance for years, and you've been like, I've been with the same company since I was like,
or that guy's always had my back. That's what we hear in our area. I have a guy. That's the best in our area.
If you've been with them for like since you were 20, you're paying a ton more than you ever should. Like it is very consistent where that like we'll hear that story often when we're like selling to other businesses and it's like a loyal customer. They're like, I've been with this guy for like 30 years. I absolutely save people $12,000. Can I tell you?
I think I know the first person that comes to mind, and his name's Paul Healey.
It's funny on like the other side of the spectrum. I know I was talking with my mother-in-law about this, your company, and hey, let me see if I can save you any money. And I found out her vehicle, she's paying full coverage for a 2019 Ford Edge, and I think she pays like $93 a month. I said, don't switch, don't touch it, because 100%. They probably have just overlooked you for so many years. Been the same insurance company for 24 years. I said, don't do anything, because you're going to end up costing yourself money.
So how it often works. All right, I'm going to go a little bit like nitty gritty on insurance, but it's actually super worthwhile, because then I'll answer the second part of like the other stream that we usually save people a ton of money.
Mm-hmm.
When you look at like quoting insurance, there's like three main factors to it. There's timing, there's tiering, and the market. So like the market is the insurance market. Like everyone knows prices are going up, so it's really like
prices are going up everywhere. It's just standard.
Everywhere, right? But like there's different companies that specialize in different things. No one listening to this knows who they are. I do. Our company does. That's what our specialty is.
We kind of have an idea, me and him, but
yeah, you guys probably do. The next is timing, right? So it's really about when you come in there. Insurance is more analogous to like flights than anything else. So when they're looking at your history, the time in which you get a quote, whether like claims or a ticket, is rated on that matters a lot. So what we will often do is sometimes someone will get a quote from us. We're like, hey, look, I'm going to give you this quote, but I'm going to come back on some random day. I'm going to come back August 17th because this claim falls off and it's a $40,000 claim. I'm going to save you a ton of money because they're not legally allowed to rate on that. So it's about like the timing. That is a big thing we do. We structure it to the timing when it's best for you as a consumer. And the last is tiering. So what that means is insurance companies make money because they find like these weird little variables about you as a risk and a person. And they're like, I want that. My funny story is I used to work with this dude. He was the chief marketing officer of an insurance company. And I asked him like, for beers one night, we're getting to know each other. And he's like, I'm like, how'd you make it in this business? Like, where'd you come up from? And he's like, I was responsible for the jet ski product. And my big push was we're going to take every jet ski of someone who has a DUI. And I'm like, that is so random. He's like, because my thought process was if you have one DUI, you're not going to get drunk and drive a jet ski, and you're probably not going to get another one. And it worked perfectly. They grew the business. They like took over that entire weird niche market, and they made a ton of money. But that's how insurance works. You find these weird niche variables. That's tiering.
Mm-hmm. It's all actuarial mathematics.
That's all it is,
they take
right?
in, whatever factor.
It's hundreds and hundreds of things. But what happens with tiering is when you come in, let's say you're assigned a number 1 to 10, 10 being the best, 1 being the worst. You stay at that number. So if you're 25, you're going to come in at a 3 just because you're young. If you're 18, you're going to come in at a 1. It's purely just your age. And then you're loyal to that customer until you're 45. When you're over 50, you're perfect risk, you're still paying as if you're a 25-year-old.
Unless you changed.
Or
that is crazy.
you have a great insurance agent who actually canceled and rewrote your policy.
Okay.
And that is the second thing that we do. Someone will come to us if you don't have insurance before, or you came in and you had like a non-standard, which is like a sub-tier provider, or you had state minimums, which my big PSA, don't hit state minimums. Just pay more because you save more longer. They look at your last liability limits, and if you just get higher, you'll pay more for 6 months, and then you save more forever thereafter. So someone will come to us and we're like, all right, get this, it's gonna cost a little bit more, but in 6 months, I'm gonna cancel and rewrite your policy because your tier is gonna go from a 3 to a 7, and you're gonna save a ton of money.
Is another thing, is that still a thing, like based off if you're a woman or not? Do they still do that?
They technically can. It's less.
I'm just curious because you always hear that one where
males are rated worse than females. The younger you are.
It actually depends on the state. Okay. Males and females, like different states allow different things, and like in some states across everyone, they'll rate males and females different. What blows my mind, specifically on like rating males, this is my fun little insurance gag thing. So like, the male brain isn't developed until you're about it's not fully developed until you're 25. Insurance companies knew it way before any sort of science because you start paying less when you're a 25-year-old male. Yep. You pay a ton until then, and then you see a huge rate decline.
It's because we're immature and we drive like nutcases.
Yeah, but like they literally there's a very actuarially proven, like at that age, you just generally slow down and drive better.
Although I'm sure things have changed now with technology and our cell phones and TikTok and stuff. I mean, whether you're male or female, everybody's like this when they're younger and nobody's paying attention. So I'm sure that's probably wiped away now.
Eric, just move that mic over a little bit to you.
Absolutely.
No, to your right, because you're turning right there. You're good. So any other crazy things we need to know about with how the insurance works? And obviously, just to let everyone clarify with this, it's Woop is doing this and showing you how it's all working right in front of your face. Yeah.
We'll show you our results. We literally show you the data around it. But otherwise, like as a person, if you go and do this, you're a better human being than I am. Because it took us and me years and years and years to understand all of this math, to figure it out.
And you guys simplify it pretty easy. It's pretty easy to see. It's not like where you have to go figure out mathematics or anything like that. You guys make it as simplistic as possible. So
make it really, really simple, and then everything's just. We do like color coding, red, green.
Yeah.
I was gonna say it looks like a color coded report.
Yep, exactly.
Yeah. So you asked like any other crazy things to know. I don't think a lot of people know this. In New York, in many states, not all, the number one thing that impacts your insurance is your credit score.
Really?
Your credit score is the number one rating factor for almost everything.
I knew it affected. I didn't know it was that much.
It's enormous. Some states don't allow it, but in most states, it is a really, really big factor.
Huh. Look at that. Learning something new. Nikki's like, oh, man. I know you probably have a good credit score. You're like, probably, thank God.
Oh, my insurance is through the roof, though.
Yeah.
I had an insurance lapse.
Oh.
I had for a year when I couldn't drive.
How long long ago was your lapse?
My lapse was...
Eric's trying to pick up another customer.
Yeah, I know, Nikki. You better
about to leave this room.
Well, also, he drives a Tesla, so...
Ooh, you're...
I've been driving for a year and a half now.
You've had it for a year and a half?
Not the Tesla, but I've been driving again for a year and a half.
Okay, so at 2 years, drastic reduction. If you've been, who do you currently have?
Progressive.
All right, so I can tell you unequivocally through Progressive, if you go direct or did you go through an agency, cancel and rewrite your policy. I will bet you $100 right now.
This is why we use Woop,
2
Nikki.
years from now, or at your second year, if you do that, you're going to save a ton of money.
Okay. So.
Look at that. A live client right there and saving some money. So we could try it after.
Yeah.
We'll give it a go. Eric will write it personally. He'll get it right to his computer probably.
So Eric, explain to everyone, and we can all jump in here. So if you're a Healey Brothers customer and you buy a vehicle from Healey Brothers, when does that person get contacted by your company? How do they get contacted, and what's that process look like?
So it's all after the sale, and it's all driven predominantly through email. So if you bought it cash, we're just going to send a co-branded email. It's going to come from Healey and Woop. You're going to see our logo. You're going to see Healey Brothers logo on it. And it's going to say, hey, we have this great product. It's sponsored by Healey. This is the dashboard to use it. We're going to make sure you have good coverage. We're going to give you all of our dashboard. If you finance your vehicle, we're going to say, hey, we're here to help make sure you have the right coverage and verify your insurance requirements. We're going to send that 2 to 3 times, depending on what financing you did and all that. If you go through the process, we're going to instantly tell you. I think it's like 99% of the time, we'll instantly tell you, hey, this is done. Here's your results. Here's what you need to change. Here's what you don't. If you don't have it updated correctly, someone on our team's going to reach out and just explain what's happening, explain what you need to do. If for some reason like your VIN wasn't updated, like we're going to walk you through what you have to do. In that process, we'll actually tell you like, hey, you had this trade-in because we'll see that you need to take it off your policy. You're just paying for it unnecessarily right now. So we'll walk them through that step, but it's predominantly driven through email communication.
Which is super easy, and a lot of customers like to do it that way because they don't like to talk on the phone anymore.
No, not many do.
Yeah. All right. So if we were going to talk more about our partnership and how it really benefits the customer and why we try to recommend our customers to go through those steps, what are the main key points of why you would say for right at the point of sale for a customer to fill out a form and work with Woop?
There's no downside, and there's only upside. It's very straightforward to do. Like there's no cost to you. This doesn't change your rate at any point whatsoever. If you're buying a car, in many cases, if it's a nicer car, your price is going to increase. You have no idea if that's fair. We'll tell you if it's fair. At literally no cost to you, no downside.
And I witnessed that firsthand when I did policy for my fiance. So
it does happen.
All right. So I mean, it's a no-brainer. It only takes a few seconds, and also your team's pretty reactive. They respond pretty quickly, so it's not an issue. It's not like when you have to wait for someone and call them on the phone, but it has gotten quicker in the industry as a whole. So that's better. We've gotten better at that too.
Yeah, I'd say for our viewers and our customers, just reiterating what you said earlier, it's not an immediate thing with your company. It doesn't mean that we're going to be able to save you money on day one, but it's the follow-up that you and your team does 6 months down the road or a year down the road. So if we never filled out that information, or as a customer I never filled it out, I would never know. I would never hear from you ever again, and you may not be able to save me money today, but 6 months or a year, even 18 months from now, I get contacted, I see an email on my phone or my dashboard's updated, and I just saved 18%.
Yeah, and that is the big differentiator for us. Like we're always going to provide, if someone needs something now, we're going to provide that. We're going to do that. But on the flip side, it may not be in your best interest to move this second. And there's no one else because everyone wants to make the sale on insurance. You want to get it done. There's no one that's looking at it from that long term. What's in that customer's best interest.
I mean, that was the first conversation you had with us. You said to us, it's like, hey, it's not going to change overnight. So we're going to take our time. We're doing right by your customers. We're not pushy, and we're just trying to find the best deal for them. And also, the more money they can save, the more they're going to come back to the dealership.
Yeah,
so,
and if it wasn't for the technology that you built, the alternative is what? An insurance agent going through their book of business every single month and saying, hey, let me rerun the numbers for Brian Healey, and is it going to work or not?
And they don't do that because it doesn't make economic sense to be doing that. You have to really, we literally had to build from scratch, from everything, to be able to build that. We couldn't use the same insurance agency systems because they're just not even designed for that. You may have an absolutely incredible agent, and there are some out there that do that.
Oh, for sure.
But it's not everyone. And I can guarantee if you come in, you're going to get that result from us.
Yeah, why not use technology nowadays? Like, it's so simple. Like what I use, it's pretty simple, and just to check the work of a human. Yeah. Like, you can't just rely on humans anymore. You have to always check, and they do it such a faster pace. It's a no-brainer. I mean, I used it. Granted, you're our partner, but it was super easy for me. Mm-hmm. Even though I didn't necessarily like the price, but you still shopped and you said, hey, this is the best possible price, and we went through a lot of them. But it was good. So, and also beyond that, we've had a great partnership. It's benefited our customers. At the end of the day, it helps to make sure they have the right coverage for the best price. And they're always looking out. We can help them bundle and telling them, hey, no, pump your tires. Let's not shop this right now. You have a great rate. It hasn't increased as much, which is huge for a customer to know. I think it's just beyond transparent. It's a no-brainer to at least try and check out the dashboard. So just closing up remarks, anything else you just want to let the customer know, or anything that that's very important for them to know about insurance and what to do?
What you should know about insurance and what to do. It's not always about right now. It is a long-term game, and you need to understand your own information or work with a partner who's going to help you understand and use your information to get you the best price and the best coverage. Because if you're just going out and shopping on yourself, you don't have enough information to even do it right. It's impossible.
I mean, that couldn't be any better advice. Brian, you got anything last remarks? Or
I just want to know, is it like a South Jersey accent, or is it really whoop, or is it whoop?
Is it? Yeah, which one is it?
So, I don't even know which one I say.
Yeah, because I have the Whoop on. I don't know which one are we.
So we were like, when we first started, those guys were like a month old or something. We're like, there's a million of these bracelets. They're not gonna make it. It doesn't matter.
Yeah.
Turns out they had really superior technology.
No, it's good. It's good. I mean, it makes me feel bad sometimes about myself on certain days, but besides that, it's been pretty good. Well, Eric, it's been a pleasure. I mean, I think that was very knowledgeable. You gave the consumer reasons about insurance and how to use it and how to save money and ways to stop. So, I mean, I don't think there's really anything else for us to touch on. So, I appreciate your time. It was awesome.
Thanks for stopping in.
Thank you for tuning in. Don't forget to like, comment, hit that subscribe button, and follow us at Healey Brothers on all social platforms.